Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We kind of have this market still in suspended disbelief, but from a volatility standpoint, there is some rumblings underneath the surface. I run that live trading room so I can see tons of volatility calls coming in of size for March, expecting maybe volatility from some of the headline risk, but I would say not just NVIDIA next week, potential for disappointment, but especially jobless claims coming in Thursday as we move into non-farm payrolls for the end of the month and beginning of March. Obviously, Doge has been shedding labor for the U.S. government in an effort to save some dollars there to cut deficit spending so we can get, or so I should say, so Trump can get a tax deal done and tax cuts pushed ahead, which right now are going to expire in this end of the year and August timeframe. So right now they're negotiating and reconciling debt ceiling, et cetera, et cetera, et cetera. So long story short, we have a lot of stagnation on the surface level. Underneath, there is definitely some volatility hedging coming in. So take it away, Hans. What are you seeing in this market backdrop hit over the head, which is basically we are in this market of disbelief. We're not really going anywhere fast.
Well, first of all, I made it to Chicago, and I don't know if you've seen our Canadian dollar, but it's because I was on my way to Florida, and I could only afford to go half as far. You see what I mean? You gotta stretch your Canadian dollar as far as it could go, and as far as it can go was Chicago, and it wasn't as sunny, but
And you made it back safely. Right. That was the other thing. Okay.
It was a shorter flight. So, I think what we've sort of had this underlying strength as we seem to continue to have every time we sell off. I'm seeing the VIX kind of hanging in there around 15 and change. And I think that in part, it's sort of a bit of a volatility echo from the recent sort of knee-jerk reactions down. So we had the tariffs, we had the CPI a little bit, we had a number of things, some Trumpisms that kind of got in the way of the market. And so there's sort of this sort of nervousness. Brad is nervous right now. But having said that, we're at all-time highs, right? So it's hard to deny that stocks are cool with this. Now, it's quite possible that this is the clenching ahead of next week's potential unclench. So when we look at some of the gamma levels, as we like to talk about, they have been quite high, extremely high, sort of right around where we are. So that's really leading to this sort of lower volatility because you've got dealers who are supportive of markets on the way down. We get a little sell-off. Like yesterday, we saw that, quick sell-off, 30, 40 points, and then boom, right back again. And then, but by the same token, we're not really getting too far to the upside to blast through to those melt-up style highs, possibly because of that gamma as well. So there's stock for sale and there's stock to buy below. And that's kind of how the hedging mechanism works with all those positive gamma. A lot of that burns off this week. So we are potentially free to roam about the cabin again, which is, in a world, there should be more gamma, especially with, I think, volatility levels a little bit, on the high side, given that we are near those all-time highs. We've been making all-time highs. Yesterday we made one. And so we're kind of in this area where I think we could see a little bit more supply come in and replenish some of that gamma. But it's very much an environment where I think, and we often talk about this, there's this sort of volatility clustering where either things are going wrong or they're very, very quickly back under control again. I just think it's, some of these things that we always talk about, which is a little bit of accelerant under the surface. So we're seeing these dealers very, very short VIX upside calls. And so these things that we kind of ramble on about aren't necessarily things that cause problem. But when you do get some sort of reason to sell off, that's when the accelerant can start to kick in. But having said that, we've had a couple reasons to dip below 6,000 in the last few weeks. And well, here we are. So we're right back up again. So I'm not sure what that trigger is going to be. You're going to be in a better position to kind of postulate what that might be.
I have some ideas. But I was showing that gamma level while you were talking about it, because Gamma Lab actually put up that was their chart and had a really good kind of explanation. Current gamma distribution for the SPX is below, which I just showed you. Dealers are selling many of the futures between 6,150 and 6,200. This is strong resistance. until it isn't. So as usual, and emphasis mine because I highlighted, but once the market breaks into that zone, liquidity will increase substantially, which is the positive gamma, and dealers increasingly buy the dips to delta hedge their option exposure. So this is a little bit of what it feels like right now. And yet I still have divergences that I keep talking about on kind of a bigger time frame, which is the macro backdrop is still, we talked about this, unsure about all the headline risk and the cost cutting, because it is definitely an economic slowdown trigger and jobless claims trigger. And I think that we're going to start to see that come into the market, maybe a little bit tomorrow, but definitely next Thursday and the following Thursday. So long story short, we have got some levels that I keep seeing in my intermarket that are big divergences. And then you've got your VIX skew and related tools. So we'll kind of look at that right now.
Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.